participants are quite diverse and although similar in many ways, very different in others. So we're going to try to put them together, ask them some controversial questions, hope they fight a bit, and enjoy the show. So without further ado, I'm going to introduce them. Aman Ghei from Accel Partners, please welcome him on stage. Then we have VItaly Rubstein from Rubylight. And finally, Johan Brenner from Creandum.
Thank you.
Yeah, that's okay.
If you could. Unfortunately, Chris in Lanema just called me and said that there are no ways at all to get from Estonia to here at this time, so he was unable to come. He was very sorry for that, but I'm sure that we're going to have a great discussion nonetheless. I'm going to join in here.
Oh, it's right here.
So,
oops.
Yeah, let's start. How about we just give a very quick introduction, just a couple words about what you guys are doing.
Rubylight is a very young fund, very unusual fund. We call ourselves a growth technology investment fund. We help companies to scale technologically to the global levels.
Hi, my name is Aman. I am with Accel Partners. We are a global venture capital firm. I'm based in London, and we look at our European investments. We've made 2 in Finland, Rovio and Supercell, and look to invest in many more companies in the region.
Great. I'm Johan. I'm one of 4 partners in Creandum. We're based in Stockholm. We invest everything from 100,000 euros to 10 million euros in seed to early stage startups across the Nordics and across Northern Europe. We're in companies like Spotify, iSettle, and Wrap, and we've been around almost 10 years, and we have about 250 million euros to invest.
All right, thank you very much. The first question is, of course, you guys are here to represent the fund, and you're also probably looking for a lot of startups and companies that are very young and ready to move on. So what are some companies from the region, or maybe from this conference even, that you are very excited about and are interested to meet and invest in?
Wow. You promised to be controversial.
Yeah, putting you on the spot right there.
I think we've met, that's the first time we've met so many Finnish startups. I mean it's okay that I'm first? Yeah, you guys, I mean.
Go ahead.
Yeah, we've talked to TunaSpot, for example. It's an actual application for Spotify. And beyond that, they said they will be probably upset with me if I suggest it's only for Spotify. It's a very unique approach for looking at searching for music through location. Very cool company. We talked to Publish Scissor. Yeah, very cool new content of creating like magazines for normal people like us. We talked to some gaming companies. My son, who is here today, personally enjoyed the company where you can learn guitar. So I mean, unfortunately, there's many more companies. I spoke to some Estonian guys who created augmented reality games. I mean, there's many different companies we spoke to, but as of today, a lot of the ideas are still at the concept, prototype, testing, not really kind of proven user case even, unfortunately, but we're really looking forward to sort of seeing some of the statistics, seeing some of the proof that they exist.
Like, but statistics is very important to actually, catch on and
right. The ideas are very cool ideas here, and the people are very interesting. But I mean, of course, we want to proof of concept a little bit. We don't care about monetization, but at least we want to see the users try to use it and like it.
Okay, great. What about you, Aman?
Yeah, I think I personally spend a lot of time in the mobile and internet space. So I look forward to meeting companies in that. I think Ovalin, the guitar company that is doing great things. Cab Force is also disrupting a very, very interesting market. I think, as Vitaly said, I think one thing about Finland is entrepreneurs make great products with great UIs. And I think the next step is really focusing on deep metrics, getting an MVP out as soon as possible, iterating as soon as possible, and then taking your product to the next level. So I think that's what I'm looking forward to seeing as, I guess, the event moves and the year goes on.
All right. Okay, great. And Johan?
Yeah, it'd be unfair for me to name any companies as I came in half an hour ago. But I'll be
quick
looking.
decision making there, just pick
But
one.
but I think I'll look forward to spend more time this afternoon. But I think in general, it's great to see that when you come back to these conferences, there are more and more companies. And I think if you look back 5, 10 years even, the quality of the startups that we see now in the Nordics, especially here in Helsinki, and is absolutely great in terms of team, in terms of thought process and business model, and how they want to attack the market. Naturally, there were a lot of early stage here, but I just think it's great that we see a lot more companies.
Okay, great. That brings me to my next question, and I'm hoping some discussion between you as well on this one. What are your, selection methods and metrics that you use to select the startups? I know that for some people, like the team is the most important thing, and for others, it isn't. Well, actually, probably the majority thinks the team is a very important thing. But what do you think is the important thing, and the metrics as well, not just on a subjective level, but also some objective metrics that you use?
Right. You guys want to start?
You want to start?
Yeah, sure. I think the team is definitely, especially for an early stage company, I think you're in part betting on the team, so it's very, very important. I don't think I've ever met a company when 5 years down the line, they're still doing the same thing that they were 5 years before. So I think a great team knows exactly when they need to change direction, what they need to do to change direction. And Supercell is a great example of that company. They started off as a browser games company, and today they're probably the leader in mobile tablet gaming, right? So completely different kind of platform, but I think the team was able to pivot because it was an early stage. I think when you look into kind of more growth companies and you're willing to write larger checks, I think the numbers show that the team is already proven. So that's one thing that you can kind of take off the box, and that's when you kind of get into the metrics of the business, and that becomes really more important.
Vitaly, you mentioned in your presentation earlier that although the team is important, that you guys, for instance, look at other things a lot as well, because you actually can provide the team for the founders. Right. So what's your take on that? Is the team really the only thing that, the holy grail of startups, or other metrics you look at?
I want to be a little bit controversial here. I don't want to upset a lot of people, but I think that team is not that important, and especially the previous success is completely not important at all from our perspective, because it does not mean anything for the future. So what is important is that somehow you've built a product which people like. I mean, that's it. And from our perspective, that's about it. And then if you've built that product, you're already capable anyway of, and we can figure out how to take it further. Just to correct you a little bit, we only provide the technical team. We do not provide any product development or founder visionary kind of guys. We give advice on a free-to-take basis. We do provide technical team to help them grow. So from our perspective, technical expertise in the company, in the team is not that important, yes.
Okay, right. And Johan?
I will look at team. That maybe put some more depth and color on that. It has to be a team, so more than one person. I think it's really important that you are a couple of or 3 individuals that complement each other. I think it's extremely important that you have somebody who is really driving the product and product development, because in today's competitive environment, where you're on any platform, to get through is so, and it's all about the product, and you can't really afford to market yourself to success. And in terms of metrics, we look at, in early stage, you of course don't have to have revenues, but it's really important if you have some prototype or beta out there that you can show some engagement or frequency in usage, or something that proves that you get through the blur and usage and engagement in the product. But we would never, I think, invest in a team where we went in and said, okay, we need to change this person or something. We really need to feel comfortable with the team that they can break through. And I would agree with you there that on Spotify, for instance, we invested when the company was a freemium advertising-driven model, and at the end of the day, 90% of the revenues today or 80% is the premium version, and that wasn't invented from day one.
I think for this region, what's important, and I was having a drink with Oli Rush, who spoke yesterday, who runs Airbnb in Europe, but it's very interesting if there's a team that picks certain individuals from Finland, certain individuals from Sweden, certain individuals from Norway, and really bring their skill sets into kind of one core team. Because I think all these regions have different skill sets, and one of the barriers I think for this region is they haven't been able to kind of combine those skill sets in a very nice way.
Okay, cool. But Johan, you mentioned revenue, for instance, and I know that VItaly said that they pretty much don't care about revenue.
I said I don't care either.
Oh, you don't care either. Okay, great. Okay, guys, revenue doesn't matter. Stop making money right now, and then these guys will invest.
But after some time, we need to see revenue. But I don't think we need to see it day one. No.
Okay, all right. Thanks for that. My next question is that a lot of people think that investment and venture capital is like putting 10,000 monkeys and 10,000 typewriters, and then eventually something will pop up just by pure luck. So a lot of people are saying that actually investing is just luck, and it doesn't matter what you do or what your metrics are or what you choose, that if to find a company that's going to succeed, it's just pure luck. How do you tackle that?
It is a lot of luck, a lot of luck. But I think the work that we try to do is to diminish the number of pathways things can take. So we try to improve our luck. It's like Ingemar Stenmark said, the skier. He said that it's amazing that I win more when I practice more. So we, have to. So it's a lot of luck. But I think we have to admit there is a lot of luck. We see 500 to 600 companies a year. We invest in 5 at the most, and 1%. Have we made the right decision? It's usually no revenues, a prototype out there, and a team. It must be some kind of luck.
People in the financial services industry have paid a lot of money to make best possible guesses, right? And I think that kind of extends to pretty much every field, right? I think you can minimize the risk. Again, going back to, I think team is one aspect. If it's really, really early on, doing your due diligence on the market is an important thing. I think all this kind of factors into minimizing the risk. But at the end of the day, you're backing someone to execute, and there are days when it doesn't work, and there are days when it works. And
yeah, I think in our case, we're trying to be more precise or strategic or methodology. Like we have a method, I think, and we try to follow it. But the key, I just explained a little bit the way we see it. When we were choosing at which stage to invest as our fund, we thought, well, I mean, if you do accelerators, or if you do some angel investing, if you do invest in prototype or idea level, it is pure luck. I mean, there's millions and millions of experiments every day in every corner of the world. That's pure luck. So we said, okay, then we want to invest when it's a growth stage where it's already proven that users actually like it. So here, I mean, we said then, so why would people take investments from us? I mean, everybody wants to invest in that stage, and where it's already proven. And then we said, well, we have to have an advantage. We have to have a special skill. We have to have something where the people are going to take us over other funds. And that's where we decided as a fund to focus on something which is unique, we believe, to our experience and unique offering to the startups. So, and that's why when they already know they've succeeded, we invest, then they already feel the success. They feel like, yeah, we're there. And we actually can take any kind of investments we want. And I mean, they choose us because we have something which is actually very necessary for them, and the other funds probably cannot offer that. So basically, that's how we try to kind of beat the luck system. We actually want to work as a fund on a strategic level that we always stand out and we have something to offer and to already proven successful startups, and they take us as investors, and then we make them even more successful.
So it's basically minimizing luck.
It's minimizing luck from the strategic standpoint of our fund, but we also minimize technical risks for the successful startup as well in the process of investing. But I mean, that is different, because you're already investing into something which is growing. I mean, it's not just lucky. Of course, you have to still have some expertise and know where to follow, where to look, and where to focus. But When you look at the metrics and you see the daily usage is growing, you see the engagement is there, I mean, it's a less of a riskier investment. Still, things can happen, can flop, can break, can all kinds of things. But we do that, plus we reduce the technological risks that everything collapses because of the growth.
Okay.
So,
but what about you guys? What Vitaly mentioned that their USP is basically providing more than just money and stuff like that. But what about you? What are your? I mean, Accel Partners very well know Creandum as well. But what are your sort of offerings to the companies?
The dirty little secret about all this in venture capital is that, we say we do a lot, and we do a hell of a lot. All of us, we help with recruiting, business decision, introduction to partners, other investors, daily priority decision. Should we do this today or this? What about the product? Conversion metrics, everything. But in the end of the day, it's many of the most successful startups were really driven only by the great entrepreneurs. So they were really, the investors like us sat back and enjoyed the ride. Because, so we provide a good value, but in the end of the day, I think it's really 90% the entrepreneurs.
All right.
We have to be humble about that, because they're really 99% of the success.
Yeah, look, I think we're not operators, so we don't come into your company and tell you how to run it. That's your job. We can help you with that. So, going back again to Supercell, they're processing a terabyte of data every day, and they had no idea they would be doing that, a month back. So, we've put them in touch with the guy who built Facebook's infrastructure, and that helps. That helps them kind of open doors into their back end. So it's more kind of the network effects of being a VC than it is kind of get. We like to get our hands dirty as soon as possible, but we can never run the business as well as you do. Otherwise, we would be doing it on our own.
We're basically a service provider. I mean, to some of the ventures I work with, I speak to every day. Some I speak to every month. And it doesn't matter that they are going better than the other. It's just that, in some occasions, in some periods of a startup's life, there's more or less support that's needed.
Okay. All right. I had another controversial, well, not probably, it's not controversial, it's just a fun thing. Everybody keeps, asking you about what you think about the outside world and the startups and what are the things. But I think it might be interesting to ask you the following question is, what are the worst things about being a VC? In your personal experience?
I think it is seeing all these great entrepreneurs and wanting to invest in all of them, but having to choose.
I would probably say saying no is the worst thing. I think it's part of the job where you have to say no to a lot of companies, and I think you want to help them, but time is limited, and so is capital. So I think you have to make a conscious decision of what you want to go and proceed, and I think that's one of the best things.
Vitaly?
I think apart from traveling away from a family quite often, not getting the most exciting company, like you fall in love with your investment and then you're not getting it. So that's for some different reasons, and that's probably the worst part. And then plus then traveling because it requires still traveling and things like that. Although we try to do a lot of things remotely.
The worst feeling is though when you say no and kind of that company ends up being
the next Facebook.
The next Facebook.
Yeah, that's
actually that's happened. That's happened a lot, of course, but I think we make a lot of effort in saying no in the right way. We try to, because if you only say yes to 1%, you have 99% who have met you out in the market.
So you tell them no, and then you say, but if you grow, you can come back.
No, we'll say no, but and this is why we said no. And this is what we think you could do to improve your business. So we try to help. Because if we don't succeed in that every time, but if we can make that message across, they hopefully will tell good thing about us to their friends and to their fellow entrepreneurs as well. I mean, in the end of the day, the best companies, the best entrepreneurs, they select us as investors. It's not vice versa.
And is it true that they can also come back to you if they fix those things?
Yes.
So, I mean, that's probably good for startups to take, that you have more than one try, right?
Absolutely.
Of course. Always.
I agree in terms of, I definitely agree with the last statement that entrepreneurs select you. I mean, select investors. But that's only true if your company is successful and is growing. If you're not growing, nobody's selecting you and you can't select anyone. So basically, it's only true. And most of the VCs, they will admit, every investor I know, they would admit, they all want to invest in a company which is already growing, which is already has proven the success in terms of, and some of the investors want to invest when there's already money in the company, and there's things like this. But anyway, in that case, everything is true. But a lot of money, I know of companies chasing investors with a prototype, and there's no proof of concept or anything, and then, that's not working this way, unfortunately. And I'm not sure how to get money at that stage.
Okay, but we spoke about revenues, and I know that you said that revenue is not important, but at one point it will become important. So what is your favorite revenue model that are available now? I know that SaaS is becoming very popular as opposed to what we had 10 years back. What might be the revenues in the future? So what's your take on revenue models of today?
I think it depends on the kind of sector, obviously, you're in, right? So, for someone like Ask.fm, it might be something completely different to someone in the mobile space, right? Look, I think if you have strong user growth, it's something that you can kind of put off for a while. But my advice, especially for mobile companies, is to think transactional on day one, right? Because if you're a service that, even if you have 10 users and none of them are transacting, that might be a small sample size, but you get a sense of what the cohort of transactions looks like, right? But if you're seeing explosive growth, explosive usage, explosive retention, I think those are things you can kind of address later, but always have in the back of your mind. Facebook was very similar. When we invested in 2010, they had 95% of the people coming back the next day, right? So similar to Ask.fm. So those are staggering statistics that you as an investor can kind of sit back and say, okay, guys, focus on this. We can figure that out later. But if you're an enterprise software business, you're in the business of making money, not getting users, right? So
Definitely.
Yeah, I think in the mobile space, if it's an advantage to have a paid product out there because of a few of the free, right? If you think about that earlier.
Yeah.
I think, there's a lot of revenue models, but some things we see now is very popular. We'll see where it will be, how popular it will be. Subscription models within e-commerce, it's quite hot. I think in general VCs love subscription revenues because they tend to repeat themselves. So it's good to have a check every month.
And then you can also, it's easier to measure the lifetime value than the cost of acquisition of the users.
Exactly. So subscription models is always a favorite to us, but I think all models are still out there. And
just one advice: if you're a SaaS business, just because you're a SaaS business doesn't mean you have to charge $5 a user a day, right? I think that's what some companies make a lot of mistakes in their pricing. You look at Salesforce; they're by no means cheap, right? So think about kind of the value your product brings to the end user,
good point.
and charge based on that.
Okay. Another thing is, what are the biggest mistakes of entrepreneurs when dealing with you guys directly that they make when they talk to you?
I think they come with a long PowerPoint presentation and start off by talking about something else than the product. So I think we love a team that comes and shows us the team and then shows us a demo of the product, rather than going into a lot about the market and
giving you a 20-page business plan or something like that.
Yeah. Yeah, I think when they say you should have a great 2-minute pitch, it's not because I think it's not because you have a limited amount of time. I think it's because if you can't summarize your business in 2 minutes, then it'll be very hard for me to understand it in 20 minutes, right? So I think I think some of the entrepreneurs come in and they overcomplicate what they're trying to do. But I think they need to stick to basics. Give the investor credit for what he knows and what he doesn't know.
Okay, Vitaly.
in our particular case, because we are mostly entrepreneurs ourselves, entrepreneurs are trying to be too secretive about their statistics, about their products, and in a good sense, they're trying to be like, we need to finish this last one page. We want to put this pixels, move this button here. It's going to look much better when you see it, because they feel like, oh, if it's not completely finished, then that's it. They're never going to get investments. Or if their statistic does not look very nice or something, they're never going to get investments. And well, we encourage people to show it as is, and as it is of today. And actually, we're going to give you feedback when you show our statistics. We're going to tell you exactly where to focus. Then you have actually a better chance to improve it, and then you're probably going to get investments much sooner. But I think that's being kind of a very secretive about what they're doing, maybe, and trying to polish everything out completely and be ideal. I mean, there's no such thing. It never ends. The product development never ends. So I mean, show as fast as possible whatever you have, and show the statistics of it.
Do you value if startups say, are showing that they're ready to pivot and they have alternative paths, or is that something they shouldn't, tell you right away?
I'd rather you focus on something rather than talk about alternative ways. It's very important to focus on a very narrow product plan and then follow that through until it doesn't work, and then focus on something else.
But with that focus, it's also important to be open, right? So I think the biggest mistake an entrepreneur makes is sticking with a problem for too long, right? I think the best thing he can do is realize very quickly, this is not working, let me try something else, right? But I think when you come in and ask for money, I think an investor doesn't want to hear, oh, this might not work, right? I mean, I think that's important.
Yeah, I think that we also like to see the passion for one particular problem that people want to solve. And pivoting, it's like, to me, it's a little bit, it's nice to pivot, but it's more like, it comes back to this, like, are you there to make money? You're making startup to make money, or you're making startup to solve somebody's problem? And if you're not passionate about the problem which you're solving, most likely you're not going to make any money, or the chances are very low. That's why I kind of agree that it's nice to be open, but at the same time, I want the passion for solving somebody's problem. And if the passion is there, you can pivot within that sort of passion, but I think that you cannot be passionate about several things at the same time. It's really hard. You might develop a different passion. I agree with that as well, but I mean, just stay passionate and pivot within that passion.
Your team should remain constant. The ways of attacking the problem can change, but your team should remain constant.
Definitely. I think we had some great insight from you guys, and I think we have some time now for the questions from the audience. I'm sure you guys want to ask some great and exciting questions, or actually any questions for that matter. So yeah, if there are any questions, just raise your hand and watch out.
Oh.
Good catch.
Daniel Downing, Mobile Living. If you think of the last great presentation that was given to you, what was the one thing that made you think, wow, was it the slide, was it the team, etc.? And then for that same presentation, what was the one thing you thought could have been better?
Let's start with Johan, maybe? Tough one.
I have to think a little bit.
I think that the common mistakes over here, I mean, seriously, almost everyone who talked to us, they come and they're trying to describe their business. I mean, and it's funny, like you talked about this as well. I mean, all we want to see, show me the product. Why do you come and give this long introduction about what you do and trying to figure it out and with your fingers explain, like just open the computer and show us, open your iPad and show us. That's it, you don't need anything else. We catch on, we're not stupid, we catch on very quickly. And I mean, it's
that's
like,
why you're sitting on the money, yeah.
Well, I think that, thank you. But I think that the situation is, I mean, this is a real example right here. Most of the companies I talk to, except the ones which have stands, but if they come back and they want something and they want an introduction or something like this, I mean, they just don't show the product. And I say, you know what, let's just open the product. And then the good thing about it, when they open the product, you see the passion. everybody's passionate about their product. They're like, really, you want to see the product? Really? And it's like, yeah, of course I want to see the product. I mean, and so it's a good and bad at the same time. If you're excited about the problem you're solving, well, open it and show me that you're solving the problem.
Yeah. What, Aman?
I think once you've passed the product phase, I think the most interesting thing to do is try and guess what the investor is going to question and address that straight away. Because I think the best presentation is a one where you actually don't go through the entire presentation and you just start a discussion on a topic that might be bothering the investor from the outset right after he's seen your product. So if the investor thinks this business unit economically doesn't make sense, address it right after you've kind of showed the product.
Definitely.
It really kind of creates a discussion, and once you get that discussion, you kind of walk away and say, okay, that was a productive meeting.
I think one negative aspect I had the other day was it was a great product. It was a mobile company, great product, a good traction. But somewhere in the middle of the presentation, I asked some questions, and rather than the team saying, "We don't know this, let us find out," or they said, or saying, "A good question, but we want to focus on this," they tried to make up an answer that was clearly felt in the room, that they were trying to make up an answer to please me, or us as a team, which I think again shows that you're trying to be you have this pivot thought in your mind, or want to be flexible, rather than really be passionate about your idea, and sort of upfront admitting that you don't have all the answers.
Yeah, that's an excellent point, to be like honest and open, because you guys can see through it if there's something there.
And in that aspect also some team dynamics came through. They were looking at each other and they became a little bit insecure what they answered and so forth. So I think, being honest, transparent,
Completely understandable. Any other questions? There's one over there.
Comes from Easy Insights.
So can you repeat that?
Sure, it's Dwayne Atkins from Easy Insights. Everything I've read about VCs say that you bet on team, but you guys are saying you're sort of betting on the product. Do you have anything to say about that?
So do I understand correctly that the question is that you always read that they bid on the team, but the panel is saying that they bid on the product, and the question is what's your take on that?
Look, I think it's a function of each other, and I think VItaly has his view, and so do we. I think the team is an important aspect, and probably the most in an early stage company that probably the product is at MVP stage, right? Now, if the product's already been developed and it's at a growth stage, the team is good because they've done something great to be where they are. So that's a big proof point already. So I really think it depends on the stage of the company. If the company is kind of in between, it's really an in-between decision. It's product and team. So depending on the stage.
And I think you got a little bit confused because that's not VCs, it's the incubators. I mean, they bid on the team because there's nothing else to bid on. So they go by the team because there's no product. There's just a bunch of people. So that's the one very famous from Y incubator or from those kind of types. They invented that we actually don't care about the product. We care only about your team. And so they go like that. I like what you said is that if you've done something which works and it grows, you must be good.
I think it all depends on the stage. If it's very early, it's all about the team and the idea, and then it's the team and a beta product, and then of course it's a lot about the product, and then of course maybe the team and the product has been released, and you can see some figures and engagement. So it depends on where the company is.
Excellent. Any more questions we have in the audience? Can see. Anybody?
Yeah.
Oh yeah, there on the right. Haritash. Oh no, sorry.
The question is funding 5 out of 500. It's a scary numbers. Like, what's the there's a great experience with you, and I'm just interested to know how do you give something back to the teams who failed? Like, what's the message?
Yeah, I think I was trying to say that before. So we put a lot of energy into trying to say no in a constructive way, which means that we tell them, we looked at your idea, we think it's great, or we think it's not so good because of this and this and that. If you maybe change either this product or this market or the model like this, or complement the team with a better product guy or a better tech guy or marketing guy, and do some that. So we try to be constructive and helping and I think in many cases, some people come back to us and they say, thanks for we have done that now, and actually I have a couple of cases where they've taken our advice and taking other people's money afterwards. So, but that's okay too.
Yes.
Yeah.
Thanks.
Yeah, Aman?
Look, I think there are two kinds of no's, right? One no is, oh, what you're doing is great, and all that kind of stuff, but you're too early for us, or something like that. The other kind of no is you as an entrepreneur have to take it on the chin, i.e., look, I think this is an interesting product. I have questions around X, Y, and Z. And this is why I am uncomfortable investing right now. And the best thing you can do as an entrepreneur when you get that no is actually get something out of that meeting. So I always try and say, hey, you know what? I should connect you to one of my portfolio companies who had this problem. And then even though you might not get an investment from me, you've made another connection that can help you in some way or the other.
VItaly?
I think entrepreneurship is a scary thing. I mean, there's just nothing, there's no remedy. No is a no. There's the statistics is scary, but it's even scarier because VCs are not even looking at 1% of the things which are happening in the world. A lot of them are failing before they even get to the VCs' radar screens and all those kind of things. Just a scary thing. There's nothing we can do about this. You as entrepreneur should take your own risk. You should consider everything, whether it's the right time in your life, can you fail, what are you going to learn? It's always a learning experience for you personally, but no is a no. And again, VCs are not always right. They might say no and you still be successful. But in general, I think there's one good aspect. If you maybe listen at the early stage to some of the feedback you get, maybe you will at least save some of your money and some of your time, and maybe you will do something else. I don't know. It just
yeah, and I think that's great that you're definitely going to save money and time if you get the feedback early on as opposed to very late. Do you have any more questions from the audience? Great.
So you said quite more or less clearly that you are not focusing for the seed stage funding, but for the growth stage. So when does a startup become a growth stage company, and are there some metrics that you are following there, or are you also following up some promising startups and supporting them on the way, and when they are reaching this growth stage, then stepping in there, or?
I'm not sure we said we didn't invest in seed. I think we are, all of us, more or less. And
yeah, I think one thing to know is there's a difference between what a VC does and what an incubator does, right? An incubator will invest in 100 companies, and then hopefully, some of them do well. I think a VC will have the same bar for a seed investment as it would for a growth investment, right? So, because it's not really about the money, it's about the time that you spend, and the time that you spend on a $500,000 check versus a $10 million check is probably going to be the same. So I think take that into consideration when people say, look, I think you're too early for us. But know that I think all of us are open to doing early stage investments.
We put in $50,000 into a company in the past year, so we do early stage as well.
Yeah, and VItaly?
I think that I personally, since I'm very young to this whole investing, we don't even try to fit ourselves into any boxes like early stage, seeds. I don't even know the difference. I can tell you one thing. You share Google Analytics with me, less than a week you will have an answer. And in another week you will have an investment. If
your email is going to get flooded now with just
fine.
Google Analytic codes.
That's fine. That's fine. We can handle. I've been looking at statistics for 12 years. I can tell you very quickly, are you growth stage or you no stage?
You don't even need a presentation anymore. Just send the Google Analytics.
Yeah, for me, send me the link to your site in Google Analytics, share Google Analytics, and 1 week you know if we fund you or not. I promise that.
That's a quick approach. Yeah. I think we have time for one more question before we move on to the next speaker. So, anybody? Can't see if there are any questions. Oh, yeah, there is one.
Hello. Hi, my name is Andre. I'm going to make a naive question. What happens to the founders of those startups that you fund and then they fail? Like, can you tell us a bit about them?
What do you mean?
Like,
do we hide them somewhere? I mean, or kind of like we put them in the black room and
prison or something? Yeah.
Well, like, do they have to pay something back because they failed?
No, I mean, look, it's a good question. I mean, we're writing equity checks, right? We're not a debt investor. So, you know, if startup fails, it's a $0 outcome. We lose all our money. Everyone else, like everyone else. I think the important thing is, more often than not, we actually end up funding the entrepreneur in his next venture if he is kind of, you know, someone we would back again, and most likely he would be. So, I think you should always kind of take that in stride.
You know, that happens quite often. Half of our ventures fail, right? Or more.
Well, the statistics is scary. I mean, a lot of people fail. I mean, this is just part of life. You fail, you move on. If it was enough for you, you get a job. If like Dmitri, unstoppable entrepreneur, you start a new venture. So,
thank you.
So but I was an entrepreneur myself, and I took money from other companies. I know how it feels. Even though I'm taking an equity investment, I always felt like I will owe everything to the rest of my life, I mean, to those investors, and they will put me in the black room, and then they like press money out of me. In reality, it doesn't happen if you take money from normal investors, but but I think you still should be responsible. You should be responsible with the money which you take.
All right, I think we can wrap it up here. Thank you very much, guys, for a lively discussion, for all the insights. I think the audience has a lot to think about and to do a lot of emailing. So, you know, let's thank the speakers for being here and give them. Thank you very much.
Thank you very much.
Thanks, Dmitri.
Thank you very much.